inclusion is rendering products and services of the banks to low-income groups in an affordable way, because the way they access these products and services is quite different from the way the other groups access. So we have to take special care, and we all understand how important it is for the Indian GDP. The contribution that these people make to the Indian GDP. So the way these people access the financial products and services is quite different. So that's the reason why we take special care, and we have started financial inclusion. And if I now will come back to this slide, which talks about the statistics. Basically, nothing much that I can say here, but I would like to add one point that the numbers that you see are higher when compared in 2008 or 2009. It has completely been increasing. That shows that the importance that is given to financial inclusion has increased. So you can look at the no-frill accounts, which says you do not need any balance, and you will not have any checkbook or something like that. But basically, you will have a debit card for access. And when you compare it with the savings account, you will have a bit of balance that you need to have in it, and then you will have the checkbook and other stuff. So that's the main difference. And then you can look at the ATMs, POS cards, and this stuff, the Kisan credit cards. So this is one of the way through which they can lend money to Kisans at the lowest, at probably low interest rates when compared to the other stuff. That is, they used to borrow money from the other money lenders which were there in the villages, but because of this system, it has all completely changed. Okay, now I will talk about the twin aspects of financial inclusion. For the proper functioning of financial inclusion, it cannot function individually. It is completely dependent on the other stuff called financial literacy. So there are two main aspects of financial inclusion, that is financial literacy and financial inclusion. So what is financial literacy? Financial literacy basically looks at the demand side of the financial inclusion. That is, it creates demand for the financial inclusion. So that how is it done? It is done by the banks and the other institutions which try to educate the low-income people through various programs, or they go to their home and educate them about the products and services that these financial institutions can offer to them. So that's how they do it, so that they create the demand side from the low-income groups, and they start accessing financial inclusion service, which is the actual goal of financial inclusion. So that is how critical the financial literacy part is. This is one of the challenges why financial inclusion has not been successful so far, but the success rate is improving because the financial literacy, the success of financial literacy part is also increasing. So what are the factors that are taken care in the financial literacy? That is financial literacy and credit counseling centers. There are particular centers there in the villages which talks about the credit that is given, the amount of credit that can be given to any particular villager or based on certain measures. So they educate them about the measures and the amount that they can borrow as credit. And it also takes care of the credit absorption capacity, that is how much the banks can lend, what is their absorption capacity. So this is also the function that they take care of, and they provide the knowledge on products and various services that the bank provides. So basically, if you look, these villages are illiterate and they do not have enough knowledge on what all the products and services are available and how to access them. So they give this information to them and make sure that the demand side is increasing. So that's what they do. And if you look at the other side, which is financial inclusion, the supply side, they both go hand in hand. And the financial inclusion, it takes care of the financial markets, banks and services. So they come up with new products and services. They customize it according to the needs of various people in the low-income groups, because each of them has a different type of needs. So they customize their products and services, focusing on particular group, and try to improve the effect of financial inclusion. So these two are majorly are the most important stuff in the proper functioning of financial inclusion. Now we look at the challenges that have come over in the recent time. That is the reach of the financial inclusion. It is quite difficult to render services to small villages. Initially, the target of financial inclusion was to render services and products to villages whose population was greater than 2,000. But now they have changed this. It will become they have changed this. They are targeting villages. They are also targeting villages whose population is less than 2,000. So this is one of the points that I wanted to say about the first one. And then the delivery mechanism is not very efficient. There is a concept of business correspondence in financial inclusion. That is, these are the people who individually go to the home and educate people about the products and services, and also take care of how this whole mechanism works. So it is not quite efficient because there are so many other hindrances that these guys face. One is the infrastructure issues. There aren't enough roads and other stuff so that these guys can actually deliver the service in the proper manner. And there isn't enough coordination among the banks and various other institutions, which is very much required to provide these services at an affordable cost. That is a basic aim. That's what I was trying to summarize in the beginning. We have to provide these services at an affordable cost in a transparent way. So to do that, we need proper coordination among not only the banks but the other institutions also, which is lacking right now. And now we'll look at the so since we have looked at the problems that have occurred in the functioning of financial inclusion, we'll now look at the prerequisites for the success of financial inclusion, which includes the first point, the appropriate technology. Why I'm focusing on technology here is, for an example, the usage of mobile phones is increasing in the rural area, right? So if we start using technology in the form of mobile applications, all of them use the mobile phones and they are very much aware of what all it can do. So if you can come up with mobile applications, and that is basically using technology, these people can actually use these services even though they are not well in reach. So this is the basic concept. You can deliver the services at an affordable cost, you can reduce your transaction cost and also improve your efficiency. So that's why technology is very important here. And then you have to improve the efficiency of your delivery model. And also, as I was saying, that there isn't enough coordination among the banks. That's what is mentioned here. So these steps are also taken care right now. They are improving. That's what the statistical numbers are also portraying. Now, one more stuff that I would say is the third point and the fifth point. That is, initially when the financial inclusion concept was introduced, the banks were informed that they have to take care of this stuff, but they weren't very determined because they didn't have that part as their goal. So they just tried to deliver the service and product, and there were so many challenges that they could not overcome. But now in the recent years, the success rate of financial inclusion is their goal, is one of their goals. So they have become very serious about it now, and they are start finding out efficient ways of delivering it. So that will determine our success of financial inclusion also.